Hi, welcome back to Crypto News. On this channel, we'll keep you updated with the most important news in the crypto markets. So if you're into crypto and want to make the most from this market, make sure you subscribe and hit the notification bell. And I'm Chloe, your host today. Let's get started. Amidst the carnage throughout the crypto market this year, one of the few bull market heroes that has yet to be slain is Michael Saylor, the founder and the CEO of MicroStrategy. So MicroStrategy, the biggest Bitcoin whale. As one of the market leaders in the industry, MicroStrategy has the most prominent Bitcoin position among publicly traded firms engaging with crypto assets. The company holds approximately 130,000 Bitcoin, worth around $2.08 billion on its balance sheet. However, the business intelligence firm acquired the assets with not only cash but also debt, bringing about rising concern from crypto proponents regarding its debt structures. People are afraid that if MicroStrategy could not service its debt, it might sell part or own its Bitcoin holding, causing a huge dump in Bitcoin price. So, what is the structure of MicroStrategy debts? Does the company have the Bitcoin liquidation price? If so, what is? Is the underlying software business profitable enough to service its debt? So, let's figure it out today. The study titled The Health of MicroStrategy Bitcoin Bets was conducted by Blockworks Research, a crypto-focused media firm, to uncover whether MicroStrategy has Bitcoin liquidation risks, the risk level, and the company debt structure. Firstly, let's find out what is the structuring of MicroStrategy debt. According to Blockworks Research, the company held a total of $2.7 billion of its long-term debts in the third quarter ending in September 30, 2022. The debts comprise 2025 and 2027 convertible notes, 2028 secured notes, 2025 secured term loans, and the other long-term secured debts. The breakdown of the debts includes $655 million convertible notes completed in December 11, 2020. The fund has a fixed interest rate of 0.75%, payable semi-annually around June 15 to December 15 each year, with a conversion rate of $398 per share. So is MicroStrategy to top up collateral or face liquidations? With a Bitcoin portfolio of 130,000 Bitcoin, bought at an average price of 30,000 per Bitcoin, a total of 30,051 Bitcoin worth around $480 million at the current price of $16,000 per Bitcoin has been used as collateral for 2025 secured term loans with Silvergate. Recall that the company's subsidiary MicroStrategy took on a $205 million loan to increase its Bitcoin holdings using part of the crypto assets purchased by MicroStrategy as collateral for the loan. Due to the current market crisis, the company will need to increase its collateral on the loan if Bitcoin drops further to $13,644 to avoid a margin call that requires the loan-to-value ratio, or LTV in short, to be returned to 25% or lower. Similarly, the company needs to top up its Silvergate loan if Bitcoin drops to $3,561. So what is the real concern? While the aforementioned risks to MicroStrategy and its Bitcoin reserves are relatively far out from becoming immediate concerns, the bigger worries lie in the company's ability to service the interest on its outstanding debts. Prior to taking on over $2.37 billion of debts, MicroStrategy was earning interest on its operations. However, they now see a net outflow of cash from the interest expense to service its debt. For the quarter ended September 30, 2022, MicroStrategy incurred over $38 million of interest expenses, as depicted in the chart below. As getting a better picture of how the software business is performing by removing the large impairments incurred as a result of suboptimal Bitcoin accounting standards, we see that the nearly $40 million of interest expense paired with a declining income from operations is a cause for concern. However, the company maintains a cash and cash equivalents balance of nearly $67 million, providing MicroStrategy with a buffer through 2023 in the event that its income from operations continue to tread water. In general, the short-term concerns around MicroStrategy and MicroStrategy liquidity profile and its ability to service its debt to maintain its level Bitcoin position seem misguided. For the time being, the business has approximately 35,000 of liquid Bitcoin on its balance sheet to top up collateral should Bitcoin fall below $30,500 and push the LTV on Silvergate's loan above 50%. The more legitimate concerns is the company's ability to service its financing payment over the coming years. The company's software business needs to improve profitability to be able to do so. Assuming the current $67 million in cash on its balance sheet will be used for more Bitcoin purchases and be drained as a result of interest payments. This is especially true between 2025 and 2026 if the springing maturity date on its 2028 senior secure notes is triggered. But for the time being, MicroStrategy poses no immediate risk to Bitcoin markets. So, do you think MicroStrategy will overcome these financial stresses and continue holding on of its Bitcoin? Share the thought on the comment below, and if you enjoyed the video, you know what to do. Hit the thumb up button, subscribe button, and also turn on the notification. I'm Chloe from Crypto News. See you on the next video. Bye!